up traders, what up investors, Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. And I know I've been somewhat MIA. I have been pretty actively in the Discord. I have been feeling fairly ill in the sense of a head cold and just really bad sinus pressure the last couple of days, and haven't been able to really focus and do any of these videos. That being said, today's video is going to be coming out at the GME debacle that we saw recently, basically coming out yesterday on a lot of potential articles and hedge funds kind of turning this little magical knob on the press or the media to kind of help them skew in a certain way. And I have this is more for entertainment purposes in the sense of none of this is completely proven fact in that sense of pointing the finger and be proven in a state of court, but it does not stack well against on some of the allegations and of course the video they're going to be looking at of Jim Cramer back in 2006 talking about how a hedge fund manager or portfolio manager can kind of skew the market, and it is legal, like it's you have to understand being a retail investor on how these practices could affect your day-to-day profits, because of the larger people with more capital are able to kind of fluctuate certain prices, have more links in the media. Not saying everyone does it, but let's be blatantly honest. You have a person like Jim Cramer saying allegations like this. That's pretty like if you're not doing it, it's kind of the saying of like, if you're not cheating, you're not trying kind of scenario. I'm not saying everyone is not has a north compass of being the most have the best compass in the sense of leadership, in the sense of being moral in the market. But again, we're talking about greedy pigs at times. So that being said, this whole GME thing has been a very crazy, intense kind of a runaround of prices, really just between retail investors and larger hedge funds that have made billions of dollars of shorting stock prices, and really just kind of it's their turn to kind of come to roost. And now you have the retail investors, of course, the larger movement of Roaring Kitty and things like that, really kind of pushing through. So let's go ahead into the main screen here. So this is the article here that a good subscriber of mine, Alan, has shared with me via not the Wall Street Bets. This is / or RGME. They made their complete own subreddit completely outside of GameStop or Wall Street Bets. This is everything and anything about the biggest short squeeze ever in GME. And this individual about 4 or 5 hours ago posted some incredible stuff going on to some the F word about the media purely kind of helping the funds out on the larger folks. We're going to be checking out this link here as well from Jim Cramer on talking about, again, the 2006 stuff on his street.com, talking about market manipulation. The first one is basically going to be coming into right around that 11 to 12 Eastern Standard Time as yesterday. We saw a very large drawback. We saw a lot of articles hit out at almost the exact same time from CNBC, from the street.com, both coming out at very unique times. And then again, this one's a little interesting because he dives into the aspect of like, how in God's green earth did it was published at 12:41 p.m. EST. The journalist himself started to share lots of this decline from 12:30. So basically, the post is like saying like, hey, how in God's green earth did this individual get all the screen caps, get all the writing done, and at the same time see the market come down in about 11 minutes? Basically saying that his it gathered all this data and all this information and wrote it within 11 minutes, basically putting his multitasking level to a very high extreme. Then at the same time, you have a lot of other components coming out on some screenshots that were kind of like misleading, and then people then shots were deleted in the sense of this very article where it was posted at 11:55 a.m. but the screenshot on the pic was at 12 o'clock. So that didn't make sense on that. But hold up, there's more. There's people, again, via Webull, which is it's a customer service rep, whatever, saying like, yeah, at the time the news came out, of course, there's a be an influx because again, if you know anything about the markets, a lot of the short-term market trends are really driven by algorithms. So 75 to 80% of the 1 minute charts that you're looking at are mostly algorithms or computers you're trying to battle against. And these algorithms scour terabytes of data on an hourly basis and on like a very, very high refresh rate. So the hedge funds, the news people know that. So if they put out 15, 16 different articles relating on GME short squeeze going down, failed short sell, the moves over, whatever like this. The algorithms pick out those keywords out of those articles, and that course kind of creates a snowball effect that kind of can things coming down at that point. So again, nice little interesting article. We're going to be listening to the Jim Cramer part of the aspect of this little market manipulation stuff. So we're going to be looking at this video here. This again was reposted by Lance M. Basically, this video was from 2006 from thestreet.com. So I think it was December 2006. So they're going to be talking about some stocks that you haven't probably heard before, like RIM. They will be also talking about Apple, which you can kind of see on how again, if you're not somewhat new to this on how hedge funds kind of use media, again, I'm in the camp and believe that CNBC is somewhat in not say cahoots, but in the sense of what is CNBC for? They're talking heads. What are they talking about the markets? They're talking about after the fact. Who do they have on? They have hedge funds CEOs so they can talk their book. That's the way I look at it. You have to look at it from a very defined periscope of like how do they make money? They make money from advertising and so forth. So again, that completely out of the way, let's kind of take a quick listen here. We're going to be kind of skipping around here a little bit, and I have to find the exact spots here. So basically, Jim Cramer talking to a host here via thestreet.com on how a person with a fairly large amount of capital can really kind of move the futures in either way. But let's take a look.
Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could.
So what he's talking about here is basically committing on the pre-market time frame. Again, most markets in the U.S. open at 4 a.m. Again, if you have a hedge fund, has the trading hours are much more easier to do because again they have higher linked cash. So normally like on Robinhood, Tastyworks, you're not able to start trading stocks until 8:30, 9 o'clock Eastern Standard Time. So what they're looking is those gap up moves. So like let's say what she's talking about here is going to be talking about Apple in a little bit. If you want a gap up into Apple, kind of make things rosy, of course, Apple's going to be the largest stock. Wasn't the largest stock at the time here, but potentially gathering some of that information. So if you look at a volume chart pre-market in a stock, you can really see there's little next to nothing. And it only takes 10 or 15,000 shares, depending on what you're looking at. Again, that's a lot of money for like a retail person, but for a hedge fund, no, that's nothing.
Affect it. What you're seeing now is it probably is bigger market now. Maybe you need 10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game. And
you see the co-host like, oh, it's a game to you, Jim. It is a game we play, right?
You can,
but some of the game is easier for others, right?
Move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a
stamp of approval.
Very quick way to make money and very satisfying.
Okay.
And very
by the way,
satisfying.
No one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
He's not going to say it on TV. Again, this is 2006, so it's different times. It's yeah.
Well, on a related note, there's so many more hedge funds today than when you were
Right.
managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it
Well,
tougher?
you know,
'Cause there's-
the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So I mean, let's say I were short. What I would do is I would hit a lot of guys with RIM. Now you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You
Foment.
can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't
Right.
understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff.
Right.
This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So you know you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid, take and bid, take and bid. And if I wanted to go lower, I'd hit an offer, hit an offer, hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are all
aka the moron longs would be the apes, the retail investors right now.
also keying on research in motion. So
There's a lot of
we're
that going
seeing,
on today with
yeah,
RIM,
we're seeing that.
absolutely.
That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are
Leaking, or not leaking is the wrong word, but calling up and saying, kind of artificially inflating certain narratives, aka what we're seeing with some with GME.
all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Yeah,
You
Apple's
mentioned-
very important to spread the rumor that that both Verizon.
Again, the commentator is like, okay, Jim, like this is a crazy. I hope this is not recorded and it's going to be posted 20 years later somewhere on the internet.
Verizon and AT&T have decided they don't like the phone.
Right.
It's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that.
It's the same thing what we saw with Tesla. So Tesla, the hedge funds literally took out pages of ads. They flew drones over the factory to say, look, all these cars are not selling, blah, 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 blah. And it's just really just kind of creating this narrative to kind of help your underlying position. And this is really what he's talking about with Apple, of course. And this is 2006, ladies and gentlemen. So 2006, the Apple's first coming out, and if people wanted to short Apple, you have to create the narrative saying, "Hey, AT&T and Verizon's like, hey, we don't want Apple. It's not ready. It's a whim. It's not going to work. We're more of a Motorola or Samsung house." And here it kind of goes into details on how
That's
to really kind of keep it
and
moving.
you can claim that it's credible because you spoke to someone at Apple because Apple isn't in a, doesn't
Right, they're
issue
not
any
going to
statements.
comment. They're not going to
Right,
say.
so it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, you call 6 trading desks, and you say, listen, I just got off the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let.
AKA somewhat like dark pools, AKA like something like, again, this is 2006. So right now, there were algorithms there, but not as frequently as the high frequency stuff we're seeing now, on the sense of just counteracting these markets.
Let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
I might also, by the way, because the stock at 84, 85,
But wait, there's more from Jim.
a little bit of capital, you go buy some January 80 puts that makes it.
This is interesting, okay? Buying January 80 puts. Of course, at the time, Apple was like trading around $85 to $90. So, hey, let's create a news story here, ladies and gentlemen.
Look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts. Then you go position limit with you use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts, and you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer UBS. Then they call Pisani again. You have to use those guys and say, listen, I see a big buyer of puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about
right,
it except
but
you.
what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because
Did you hear that? Let me rewind that real fast.
mode is to not do anything remotely truthful. Because
The anchor's like, okay, where we're going with this? Don't do anything remotely truthful.
the truth is so against your view
Right.
that it's important to create a new truth to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is.
So yeah, I want to link this stuff in the comment section down below. We can listen to this for a little bit longer, but I kind of wanted to dive into the charts and kind of look at the whole GME stuff going forth here. Of course, GME, you have to understand this is a stock that is clearly not from this current planet or the third rock from the sun. Especially coming into yesterday, we had a lot of Spain, aka the S is silent in that one, with that market manipulation that we saw. But it really has been, it came back fairly strong coming in today. Looking here again, what do we always talk about via the trading stuff on the charts here? That 5 and 8 EMAs are the momentum driven moving averages on the daily chart. If we go to like an hourly 30-minute chart here, you saw that move coming in yesterday. Let's dive down to almost a 1-minute chart here. Of course, you see that limit around 12:17, 12:15. Again, yesterday, right at around lunchtime, a huge drop from basically 350, okay, so 345, 348, all the way down. It was gapped down multiple times, again, because it was halted quite a few times. So when something gets halted or circuit breakered, meaning that it's like, hey, there's been so much volume or just so much activity or price drop that was so aggressively up or down, it has to be halted to kind of get cooler heads to subside and kind of going through. But there aren't any cooler heads here. This is a very much a battleground going stock here we're seeing with GME. Of course, gapping down from basically, we can kind of just do a quick little analysis here from here to here. Of course, Thinkorswim doesn't update that. I wish they would do that. Okay, here to here. So basically, in about 25 minutes, it dropped 50%. Okay, so 50% in a very short period of time, or $176 in about 30 minutes. That's substantial. Again, this is a short squeeze. It's a battle stock. It has the gravitational pull makes no sense here. But once it kind of rebounded from that, it kind of just continued to kind of moving about its way. Coming into today, this thing looks like it could potentially break above 276 and make its run up to potentially that $333 again on this movement. If we do get that pulse higher, this could be a fairly large rocket ship going higher into Friday. Again, we don't know if, I don't have a crystal ball yet. I had ordered it from Amazon. It hasn't come in yet. If we do see that larger market manipulation coming in again, manipulation is a very strong word. I'm going to stick with it just because the narrative that I see and I personally have seen and I understand on how larger funds do it. Of course, like Jim said, if you're not doing it, you're not winning here. Again, from 2006, from thestreet.com, Jim Cramer. At the same note, very much, again, battleground kind of stock, looking at some initial support around 250 again. So looking here on an hourly chart, we're using that 34 EMA, which is the orange line right here. Again, right here, we're highlighting it. So around that 250 range as support in the short term. So if that does not hold, we could easily see a break here, and we saw a 1, 2 support. So 1, 2, some support coming in potentially at 221. Again, that's also a fib level from going back from its previous high to low. Looking at those, highlighting those limits there. So if we do see a break above this, I think this could easily run up potentially to that level. In that being said, but again, this stock is not from this planet, okay? I want to be careful, be super mindful of like, hey, anything can happen with this. The gravitational pull, the idea or theory behind price movement in this does not exist. It's completely battleground stock. Again, I cannot emphasize this enough on the sense of this thing could blow up in your face. This can go to 1,000. I don't know. This is really much just a battle between retail, hedge funds, and just the gravitational pull from the markets, and how much emphasis are they going to be putting on this particular stock. On that note, I hope this was educational. Again, I had to put up the, this is a very speculative trade. Okay. So GME, very speculative trade. Please do not YOLO your whole account on this and just kind of just throw money at it, just willy-nilly. I need to be very upfront about that. On that note, I want to thank everyone for coming out, watching the video. Please don't forget to like and subscribe on the way out the door. And I have a couple affiliate links I want to talk about before you head out. First is Tastyworks. If you want to open an account of $2,000 or more, you have an opportunity to choose 100 free shares or 10 options to start your trading of $2,000 or more. And then second, we're going to have an Amazon affiliate link using Audible. I love Audible. I listen to books all the time. Definitely check that link down below if you're interested on learning some fantastic stuff and having fantastic books being read to you while you're doing trading, walking, whatever. All right, ladies and gentlemen, thank you so much. Hopefully, I will see you guys on the next live stream. Please don't forget to like and subscribe on the way out the door. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.